Hey guys, how are you? Welcome, and we are chatting about a video I did a short while ago, can't be too long, 3rd of September it was, on something that we'd been trading and watching for a while, that is the Antipodean currencies weakening. I spoke of a trade against the Australian dollar, US dollar, which is this one you see before you here, with the downside setup. And I also spoke, quite bizarrely, of the New Zealand dollar losing ground to the pound. This is the same Brexit pound of the great euro malaise, the lockjam, all the politics, the devaluation, all the damage that's supposed to be happening to that currency, and a rather debt-free New Zealand, well-run, small mid economy. So it's quite a big call. Let's see how they're done. That was round about, by the time I broke the video, we were already at the second interim on the Aussie USD. Your update there is that we went from here up and down, churned for a while, spilled and made the target we suggested. Although I expect further downside for a shorter time frame, potentially you can get a bit of whipping and lashing around, given that we've just made the geometry of a target. So it's now not the time to chase in. When I spoke, there was certainly scope. It was up around here for more downside to be taken there. Let's talk about the GBP New Zealand. That was a lot earlier in its cycle. In fact, we were here and it hadn't even triggered. This is a 4-hour chart. This is what it's done in the short time since the 3rd. The 3rd of September was here, down here. You can see if you look at the bottom of my cursor, that was the 3rd of September, around 194. You're now at 199.8, about to trip 2, guys. At 194.86, we said you'd see 2 in short succession. This is 4-hourly chart. You could have got in well sub 195, and you would be looking now at better part of 2. So pretty decent. You are about 500 pips to the good when you make your 2000 mark. But is that all? No, it isn't, and it will have periods where it rests. This is the full target that we've provided. This is what we've been trading. You could have been earlier on this trade if you've been with us in terms of this. In fact, you could have catched the break at 193 down here, or even at the point when this primer-like structure initially set up and began to get impulsive over here. Since then, that ascending triangle, note how you've melted up out of an ascending triangle. But, you say, technical analysis says ascending triangle, ascending wedge, my apologies, not ascending triangle, ascending wedge, breakdown, trend change. No, not when it's inside a funnel on a macro HVF on a bigger time frame. It's part of the early buying coming in, so we put in orders there and we were filled, and up she goes. So nice little move there that we spoke about, 2.020. So that is, yeah, you got about you got to get over the 2 mark, which is going to be a key level of significance. You've got to push through that, pull back, but in the longer run, 2.0574. So just to give you a small idea about how that would have played out, if you'd taken the break there when it started to show impulsiveness in our funnel after what we would call a primer, you could have optimized on the low 2 without being too aggressive, even though there's a low 3 in there, and you could trade for the big time frame. That's a 6.76. By most people, that's exceptional. For us, yeah, it's pretty good. We start looking and taking from 4 and up, but it's not a double digit. It's okay. It could have been optimized further, and that's where the primer and the funnel analysis comes in, and you would have required to drop a time frame to show that. Why don't I have a little quick look and see if we can show you how that could have been refined further, or if it could have been. It's not always the case. It got quite impulsive over here, so actually I would say you've probably done about as well as you could have. You would have not wanted to enter too much more than that. It was getting quite impulsive. So yeah, it's about right. You might have got in on the takeout of the round number on this zip. slight risk of being a bit early, and that would have been your stop point. The crack on towards the funnel and the respecting it, then the rising wedge drift up buying, that's taken you up pretty good. I don't think I would care to optimize that much more. I don't think it would be tradable. Many people after the fact will, oh, you could have done that and make it into some crazy ass risk reward. I think you're about there or thereabouts anyway. So 7.62, not a bad return on risk. Hey, nothing has been achieved yet, so we're talking as if it's fait accompli. I've seen markets go this strong through that interim, and by the way, in that interim, you've just run that first interim. It's not the time for those that realize they've missed this trade or half missed the trade to charge in. It's a higher risk point now, especially when it's going up in such single-minded manner. It could come back. It could come back all the way and kiss the funnel. It doesn't mean it's going to make target. There is one thing you learn about trading. There are no guaranteed outcomes. Probabilities for you just tend to improve. When you are entering down here, roughly at that enter point, the break of the primer, the probability that you were going to make that before running that was not super high. You were relying on a lot of dominoes to fall in your favor, but it was better than the risk reward reflected, because you had the DNA, you had the trend in your side, you had the structure, you had the squeeze, you had the geometry of the full HVF method. And by the way, guys, like the Facebook page, we've got an amazing mini series, and I will be posting a Facebook page that those that would like to be included in the free mini series can pre-register. We're going to do only so many numbers, not yet finalized, but pre-reg on the Facebook page, and then those that have taken the time to pre-reg will get sent it the minute it's completed. So we're doing some interesting work there. Check the link below if you're interested in getting in that. So it'll be a 5-part mini series, completely gratis. So I get on my YouTube, oh, I can't afford your course, help me. And we do want to help, but at the same time we have to be respected for our time. And we have to serve the people that are serving us and giving their energy to us. But then we say, okay, we're going to set aside a bit of time and we're going to do that, and that'll bring a lot of people up. And when you make some proper money, you'll realize how awesome it would be to be in a community. So we get you a little bit of skills, and maybe you do something positive with it, and then you can come on board as you grow your account. But anyway, so that's the deal. 7.62 risk reward, GBP New Zealand. So the Australian dollar made its target, may stall for a bit. The New Zealand is looking weak and is losing ground against the great much maligned pound. Have I checked how the pound is doing against all the others? Honest truth, I don't know if this is New Zealand weakness or pound strength, so it would be incomplete of me not to at least have a little squiz. So let's have a little look. Oh yeah, did I mention the ruble? Yeah, we sure did. Also making great progress. Let's take the Aussies one out. Let's have a look at GBP USD to see just generally against the dollar how the pound is doing. Is it getting a bit of strength? Yes, it has had a bit of a push. So there's part of that is, some of it is going to be the pound strength. Let's have a look at New Zealand versus the dollar. So we're kind of neutralizing both the effects towards the dollar, and New Zealand is softening against the dollar, but not in the same way that it's being forced into a pump against the pound. So you're getting, when we've taken the dollar in the middle there, you've got the New Zealand that's weakening to the dollar and the pound that's gaining to the dollar, and that's what's given you that strength that you see there. So maybe the pound oversold, my friends. Oversold, and maybe a whiff of a deal, which will be a big sellout of a deal, no doubt about it in my mind. I've said it all along, but they'll pump the currency anyway. On the uncertainty is over. Markets don't dislike Brexit. This is a fake notion. Markets don't dislike Brexit at all. The currency doesn't dislike Brexit. It doesn't like uncertainty. It wants to have a feel that there's some semblance of a direction and a plan that is coming forward. So with that said, keep an eye out for further New Zealand dollar weakness and a little bit more of GBP strength potentially. So that's your currency update on the Australian dollar and the GBP New Zealand on that antipodian slowdown. In other words, the outlook for interest rates probably not near as strong and as hawkish as most would want to believe. And I would guess the old housing market has something therein to do. Okay, bye for now. Speak to you later. None of this is a recommendation. Don't forget to go register on the page and the link below. Speak to you and trade well for the week ahead. Trade small. This is not advice, purely entertainment.